Hi, everyone. How are you, Warriors? So someone just posted here, another wild one. Great to have F.A.C.E in these markets. Shahab, how are you? Richard, Sinatra, Simon, how are you, buddy? And AJ, and we have big risk off happening here. Hello, team.
Hi, Dale. Hi, everybody.
I came in. So you want to start, Kmam? What lit up risk off today?
Credit Suisse.
Okay.
Yeah, there's a lot of dark gray swans on the lake end of this winter. Perhaps spring has to wait for a little longer, especially in the banking environment. Now, but it all kicked off. It was relatively quiet actually in the market when we opened this morning, and then the Saudis decided not to put more money in Credit Suisse, and that got the ball rolling completely to the other side. Yeah, so a violent risk-off move.
Yeah, it's kind of overshadowing the ECB.
Everything. Yeah, everything.
Yeah.
I think it also, I mean, if you look at, because there's a lot of involvement of the European banking sector in Credit Suisse as well, right? I mean, it's even if it's Swiss and neutral, it's still a European bank. So
all right. Well, I don't find that unusual because the narrative has been after the great financial crisis or the Great Recession that banks here in the US wrote down or cleaned up balance sheets. I don't believe it. They have a lot of off books derivatives that just, I don't know how the accounting handles it, but it's not on the books, and that Europe never did it. So that their banking system was much more fragile than what's happening here in the US. So I have to think that, if things are happening here, even though SVB isn't, one of the big four, that there's going to be problems over there even more.
Yeah, they have a lot of cross assets, of course. I mean, and cross interests. That's why we have seen these European banking sector getting under a lot of pressure. As soon as the news came out, like less than an hour later, we saw like the major French banks going limit down. So there's a lot of cross involvement in there. But on the other hand, I mean, again, the big banks. Well, Credit Suisse is a big bank, so it's a totally different animal than SVB, for instance. Yeah, the BIS rules are relatively strict, but then on the other hand, one can't take away that there's, as I said, a lot of cross involvement in all those European banks, and that's now weighing on the whole banking environment. Yields have absolutely collapsed on the back of it as well. Risk collapsing. Yen is getting his safe haven status back since the SVB. The SVB thing. It's because this, as I said this morning, yen was actually weaker. We had those wage negotiations, some of the results coming out, not the final ones, but the market wasn't impressed. Dollar yen was higher, euro yen was higher. And then Credit Suisse hit with all its problems, and the market completely, the famous rug pull.
Okay. Well, here I just want to talk a little bit about what I did here and why I'm aggravated. And you think I'd be celebrating, right? So everyone knows, I was buying VIX, I don't know, down around 17, 18 in that range. And I got out this day. All right. Now, I don't know if I will trade options again. I just want to give you guys an idea of what happens in options and how much more straightforward things are in FX. So I own 25 calls, right? So they're in the money, and UK and Ryan, you guys follow options, and you know how, even if you're right, you're not as right as you could, you thought you would be. So anyway, here we're at 31, okay, and I see this divergence developing early in the week in S&Ps, and I go to the door, and I had 25 calls that had $6 intrinsic value And you know the best price I could get? 450. I wasn't even given intrinsic value on these calls.
Was it?
Okay.
But
Huh?
is it due to spreads or is it
No, no. I mean, there was a 20-cent bid, but the offer wasn't even at intrinsic. The offer was a buck or two under intrinsic.
all
So
right?
don't, so, and then I looked at it here and I go, well, I was just so right. And, it was barely a double. I was going to reload here and I go, oh, you know what? Even when I'm right, I'm not that right. And who down here. So anyway, now they're going to work. You see this? 1, 2, we're probably going to make a new high in VIX to complete a 3. Anyway, I just want to let you guys know about the options, but from a trading perspective, always reload when you've had a big trade and then the market comes back towards you. Okay, at least once try it, because you're going to feel aggravated that there was, even if you got out great and that was a pretty good exit, you're going to feel aggravated that you're not there as the continuation of that move happens. So recommit, maybe even smaller size, but still be there. Okay, that's what I wanted to share. So, guys that have been doing it like me for a long time, still, trying to, still growing and learning the same lessons over and over again.
I have a question. Can you trade it around not cash but futures or whatever? Can you trade that index
Yeah.
de facto around?
Yeah, well, they have
Because
products where it's not options like this. I own
no, but can you just trade it? I mean, straight
the
instead of doing
VIX.
options. Can you just buy and sell it in
I
the
think
market?
there are VIX futures now. Yes. In
Because
fact,
what
I
you could
interviewed.
do, yeah,
Yeah,
what
they're
I
all.
usually
Go ahead.
do on FX options is if it goes dramatically my way straight away, I'm taking like half of the option up and
Right.
off, and then I'm trading just the deltas around,
Okay.
based on
All right.
gamma. And then you're always in the trade, and in the meantime, already taken a bunch of profit. So yeah,
Yeah,
that's the way I would
yeah,
do it. But I don't know if you can do it in VIX.
yeah. That's a good rule. That when you have doubles on an option position, you take half, and then you have no risk on the trade. So
Absolutely. The
that's
best
another
trades
good
are the
rule.
free trades.
Yeah. So anyway, something I'm in and it's still working. There's gold. There's silver. Um, So gold and silver, and I didn't check Bitcoin yet this morning. Is it up on the bank problems? Not much. It got hammered from a high up around 27. You have to respect how it's holding up with risk off, though. But I don't know what to do with it. If we had another pullback to support, I might do something. I can't chase this. I can't chase anything. You know why? I can't run as fast as I used to. So, I have to sit on my lawn chair and let things come to me. So what do you do now? I mean, I was waiting for 108.50 in euro and, look at this candle.
Yeah.
Look
Yeah,
at this
but as I
candle.
say, it's one of those not black but dark gray swan events, and
Are you surprised that Aussie's holding up the best with risk off?
no, because it's more of a European problem, even though the whole risk sphere is coming off.
Yeah.
But there's a lot of euro cross selling going on now as well. So euros is quite a bit lower. So that's somewhere keeping the Aussie a tad better bit,
Dr.
Yeah.
Copper has COVID.
Come again?
You would think that he would at
Oh,
least
yeah.
prescribe an antiviral, Paxlovid, and start downing them right now. So, there's another sign of, growth, China, copper breaking down. I don't think it's going to collapse, but, this could be setting up a pretty good buy down here in copper. If you're still a copper bull and you believe in the China story. So you could keep that in mind. Uh, is Ryan around? Who's here with me today?
I'm here, mate. I'm here.
All right, Ryan. So I know you're still holding a core in yen. That's correct.
No, I'm all out of yen. I'm
Oh,
all
oh,
flat.
okay. Okay. Blake traded
Euro
the yen
sterling
like
only position at the
yeah,
moment.
yeah. Blake's been trading the yen like a champ. What do you think? What do you do? Just nothing?
You've got to look at your levels. I mean, we were saying it on the flow show. The market set itself some levels over the US banking stuff. That down in that 32s, it set a level at 38 in S&P there. If those levels break,
you made a nice trade being long and S&Ps yesterday, Ryan. I'm pretty sure you booked some pips on this.
Yeah, I
All
did,
right.
and then I raised my trailing stop up, which got taken out last night. But yeah, that was more of a gut feel trade. I just felt yesterday there was no extra news coming out for the banking stuff. I thought we might see a little bit of a rally in risk, and we did, but it didn't get that far. Ran into trouble against some short-term highs around those moving averages, 39, 40s, 48s.
And this is why it's so hard to trust daily signals. I thought it was constructive that it closed up here at above 3,900. Looked like it negated this action here, and then it was just sideways. I mean, if the bullish case would be that it holds here and puts in a higher low, like yen does, but we have the Fed next week, and the solstice next week. So I don't know. I think even if we make new lows, it's kind of late to get short, even though there are some people talking about we could see a kind of low mini crash at 3,600 in S&Ps.
The ECB tomorrow is going to be a litmus test for the Fed. Okay, and we can't ignore that, because if the ECB don't do a 50 as they've been telling us they were going to do for forever, if they change to 25 or go on pause and they cite these banking reasons, the market is going to expect the Fed to do the same. Now, if they go with a 50, it's not going to matter what they say, whether it's a dovish 50, whether they say, yeah, we're going 50, but we're worried about this banking stuff and we're going to be watching. It won't change what people expect for the Fed. They would expect the Fed to continue hiking as well. So as much as the ECB has little impact on US markets in most terms, you're going to want to know what the ECB does if you're going to be trading the S&P, because, as I say, it's going to be extrapolated over to the Fed.
Down here, I felt, I got long on it seems like a month ago, but it was only a week ago. Down here, right around 1830 and 1825 with stops under the low. I thought for sure I'd be taken out. It exceeded my expectations. I did think that silver was going to pull back to the fib, but then it started taking out the 61.8. But that was really the tell for me, was silver made a new low, took out this low, and gold didn't. And what a rocket ship. So the metals look, I mean, where's their green on the board? The dollar and gold? That's an interesting combination. What do you think of that combination? I'll bring in our metal specialist of having you knew who that was?
Wouldn't call myself a specialist, but I look at them.
Hey, you're a special as Gronkowski. Have you seen those commercials where he tries to get a credit card with a military credit union and he can't because he never had any relatives in the military? No. And he says, well, I'm special. Anyway, you're special still. Right?
Well, thank you.
I think you are. Everyone give me a why if you think Stella is a special and one of the greatest guys in the industry. Never loses his temper with people. Always, honest and transparent. So give me a why. We have some whys there. Look at how many people you have fans. All right, now explain to me the strong dollar, strong precious metal board that we have going today?
Well, when was the last time we saw a proper move higher in metals, lower in yields, lower in stocks, higher in dollar? You have to go back to probably August 2008. So
Okay.
this. I'm not comparing.
No,
this
I don't. I think
situation.
it happened after that too. I think a couple years ago, because I didn't get in gold because of dollar strength, and they both
Yeah.
ran together for a while. Anyway, it's happened before is the point.
It's happened before, and I'm not comparing this to 2008, but it started from Silicon Valley Bank, and now look at European banks. And we talked about this on Flow Show this morning. You know, when there's smoke, there's fire, and it's a delicate situation. It's brewing, and it has tones of 2008. But really, the problem is in the banking sector. And look at Credit Suisse. The Saudi stakeholders said they're not going to take a bigger stake. UBS CEO said we're looking to grow organically, and so basically there seems to be no lifeline, apart maybe from the S&B or some other savior. But there is a problem in European banking, and as long as that persists, flight to safety is simple. It's a dollar, it's treasuries, it's metals, and it's the Swiss franc. Even though Swiss franc is actually, what is it doing? Yeah, it's actually, yeah, it's dropping against the dollar, but the dollars are rising against everything. But this is a situation. You know, how long does this last? Good question. I don't see an end game where there's a full-blown crisis, banking crisis like 2008, simply because things have changed a lot since 2008. And there's been a lot of deleveraging in the banking sector. Yes, the past few years, there's been, again, search for yield, search for profits, etc., etc. And in the back of their minds, they know they're going to get bailed out again. So it's not, there's this moral hazard, which is really not good. But I don't think there's going to be a situation like 2008. But in the meantime, this is what we're seeing. You know, risk off. And weirdly, even Bitcoin is flat, right? We talked about this again this morning. Bitcoin is usually doing 3 times what the S&P is doing. And as another kind of flight to safety for people who consider crypto safety, you're seeing inflows there. So should you be taking money out of banks? One friend asks. I don't think so. You know, I think it's a bit extreme. Plus, you're protected up to an amount, right? You know, if you have a few million in the bank, then you have different problems.
you mean up to an infinite amount, still?
Steve says the era. I asked Steve about this personally, and he told me the era of bail-ins is over. There aren't going to be bail-ins. You know, I still think there could be, Steve. You still believe that there aren't going to be bail-ins because we're nationalizing our financial system right here in the U.S.?
In essence, that is what is happening, and that is what has been happening in one way or the other the last several years whenever there is problem, right? So in essence, capitalism is over a long time ago in the financial industry, which of course many people don't realize. It's a very, very big problem, right? The fact that there is
the
Fed
will play a bigger role in our life.
Yes, and the reason that we always seem to be, I mean, at some point we were bailing out banks, right? But that was politically toxic. So now, you know, we've moved
now we'll
forward.
Just hold the deposits.
Yeah, we've now moved forward to the next solution, which is bailing out the banks with printing money. So in essence, having everybody through inflation pay the cost of bailouts. And the biggest problem of all, of course, is that the moral hazard that Stelios mentioned before keeps increasing more and more. I mean, why would you care to do your due diligence as a citizen to where you're going to put your money? You're going to put your money to the bank that promises the most, even if it's not safe, right? Because at the end of the day, if something happens, you're going to be made whole.
Yeah. Okay. Thank you, Steve. You know, I'm looking at this monthly here, guys, on gold. And to me, this looks like a magnet that they're going to clean out these highs. First of all, here's, what the real RSI confirmed high up here. This did not make a new high. The high here was 2070. The high here was 2075. And I think we're going to break out over new highs. We should see 2100. I don't know. Maybe it's going to happen in a hurry. Of course, you could pick your spot to where you're wrong if you got long this month, but it's looking more likely that this is just unfinished business, and we're going to attack that double top. What do you think, Stel?
Yeah, I mean, it depends on this banking situation. It depends on the Fed does. And if you look at, you want to guess what the market's pricing for the Fed now? So Fed fund futures are pricing one hike by May 25,
Okay.
or actually just under 25, and then 100 basis points of cuts by January.
Okay.
So the market's going from one side to the other like there's no tomorrow.
Every other day.
Exactly. Do I think this is right? I don't. Do I think this situation is going to blow up and warrant 100 basis points in cuts? Not yet. I don't think so. So, but do I go against this? Hell no. I'm long silver. I am, and I'm going to be looking to add more. And I'm just riding it for now. But it's a very difficult market to trade. And Ryan said it very correctly this morning. He said, if you have a trade, you have your levels, you trade them, scale in, scale out, take profits. This is not, it's not for the faint-hearted. Don't, in my opinion, don't try to go for the home runs. Take your, maybe have some strategic or core positions. Yes. But this goes from one direction to the next so quickly. I mean, it will take one headline today for CS, which is, by the way, down 25% today. It will take one headline for it to go back to, unchanged or down 5%, and things to go to reverse again. And we price more hikes. I don't know. I really don't know. So
Okay, well,
I'm scared. Help me, Dale.
Right. All right. Well, anyway, the yields here, I mean, they're trading like a third world bond market, aren't they? I mean, the instability of the bond market that really kind of started in this range, a kind of movement. Bonds didn't used to move like that, the way they're moving now. So this is a real important area for yields. We start taking out, huh?
They're supposed to be the calm market, the elder statesman of markets.
Yeah. I guess they're not. Yeah, not in the sovereign debt crisis. They're not the most stable.
Thank the regulators and electronification of the markets for that. Machines don't think whether a market is overbought or sold. They just sell and buy when they have to sell and buy.
Yeah.
Yep.
Oh, okay. Blake, how are you? I guess he's probably busy.
We've almost finished the
Dale,
hour.
there's nothing like getting up in the morning like we do and going, what the hell happened overnight?
Yeah, I mean, that's what I looked at things last night before I checked, went to La La Land, and I turned on the platform, and I go, holy F.
Oh, I know. No, it was, it was interesting. I got up and, like, most people in North America, you get up and you're like, wow, what happened overnight? Obviously, this whole situation with Credit Suisse, all the stories about funding, and then you see the euro coming under pressure because, euro ECB expectations for tomorrow might shift. We got producer prices in just like 6 minutes. So you're trying to wrangle all of this stuff, and then, on top of it, trying to trade as well. I've been on the short side of the dollar Swiss twice. Well, I'm short right now, but now I'm just hoping for some weak PPI, and we can see that dollar yen actually hit new trend lows. That would be nice.
Yeah.
And you were right earlier, Dale. I am reshort the dollar yen, and I've been shorting it quite a bit. So anyway, it's been a hell of a morning. Let me go ahead and grab the charts real quick. Just so you guys can see here, we do have all the news that, if you guys want to get caught up on what's happening, you just, go on the ForexAnalytix platform. The live squawk feed will, kind of give you all the heads up. But more importantly, what I did this morning is, I go into the ForexAnalytix chat room. Where the first place that I went? Where do you think I went, Ryan Kmam, this morning?
The dungeon room.
I went in the dungeon room, which would be the Flowonomics room. This is actually where I got caught up this morning. This is where
the dungeon.
The dungeon. This is where all the macroeconomics room that got caught up with everything that was happening. But as you can see, we got in. First thing I started doing was getting short dollar Swiss and closing out some of those positions, and then reshorting it again just a few minutes ago. Again, so it's right here at 92.37. So see, it's been a very active morning. That was just in the trades room, not even the general chat room. So lots of things happening. And like Nick in our chat room just said, hey, we have PPI. Yeah, we do. And here's the euro under pressure. So I'm going to ask you guys this. We had, going into today, expectations of the ECB, and you might have already talked about this, Ryan Kmam, Stelios, Steve. We have, and Steve, nice to have you back.
Nice to be back.
Yep. We had expectation for the ECB to hike rates 0.5% tomorrow. How much has that shifted, do you think?
Completely.
The ECB.
Yeah.
Well, the market apparently is pricing 50-50 for a 50 or a 25.
Yeah. Well, what do you think? I don't care what the market thinks. I care what you think, Stelios. I
think the ECB is going to do 25. I said this yesterday, right?
Yeah.
I stand by that.
All right. And Ryan, I was talking to your buddy on the trade-off, Michael Brown, yesterday, and he thought that the ECB was not going to be hawkish tomorrow. This definitely gives them reason not to be, right?
Yeah, well, I said yesterday I expected the ECB to still do their 50. I'm in less mind now with this Credit Suisse stuff floating over. The market may get scared of this stuff happening, but central banks also get scared of the fact that they don't do enough to stop this sort of stuff happening. So I'm slightly more dovish on a 50 than I was yesterday. Slightly.
Okay. And how about you, Kmam? What are your thoughts here?
I think the Credit Suisse story killed the 50 BPs, right? It would be sending a bit of a shockwave through the banking system, I reckon, if they do 50 tomorrow. Even though it's not a European bank, they have seen what's happened to the European banking stocks today. I personally think they killed the 50 BPs, this Credit Suisse story.
All right. Well, thank you very much. Steve, I know you've been really incapacitated for the last 48 hours, but so
almost literally
kind of unfair for me to start asking you these types of questions. And just so you guys know, Steve's kind of been out of pocket for the last couple of days. So I'm going to avoid that at the moment. Dale, we have, a lot of data coming up, and I guess what we should be doing right now is getting prepared for the producer prices, and let's see if that'll move the market. Here's whoops, let me remove that. I don't want the dollar yen right now. I'm short it, but it doesn't matter for this. Well, it does matter for this data, but I actually want to get, I'm going to put the S&P futures. I'm going to put the 10-year yield in the middle here, and then I'm going to put the dollar index over here, and I'm going to put it on a 15-minute chart, and let's push that out over here. Then I'm going to go over to ForexAnalytix. I'm going to grab the data flash. This will give us a live read on the data that's coming out. Not only is it PPI, we got retail sales also at the same time. So let's move that over, and we are about 30 seconds from data. So let's move this over here. What are you guys thinking? Inflation? Is it going to weaken? Is it going to come in worse than expected?
It seems like nothing else really matters besides Credit Suisse.
Right. It's like, is this going to be overshadowed? Even if the data is better and futures bid up a little bit, are we going to sell into strength? I mean, that's what I would think right now. So
I would say don't be surprised if we see a negative month-on-month print. We're expecting 0.3. Let's see. Any
All right.
second.
All right.
Any second. Oh, retail sales is negative.
It's negative. Oh,
Oh,
retail
negative
sales.
0.1. There you go.
Yeah.
Oh, yeah. Look at that.
Yeah.
Wow. So you see futures like bidding up, but is the market going to sell into that? Look at the dollar
Already.
yen, absolutely getting smashed right now. Holy cow.
The New York Empire State Manufacturing Index minus 24 versus -8 expected. I mean, there's not a lot of good in there.
Wow. 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 Look at that. Just head and shoulders complete in the Euro Aussie. We might get a little bit of a bounce there. You can see the, oh my gosh, look at the dollar yen just absolutely getting smashed right here. If you guys didn't see the bear flag pattern, this is,
Wow.
Let me take you over to the general chat room so you guys can see the, this is what the bear flag pattern looks like, right? And this is what it continues to look like now. So this is what is happening in the dollar yen. We are getting close to completely breaking down in the dollar yen now. So just heads up, guys. A lot of action, lots of things happening. Dale, I know you have an interview. And just remember, we have our morning edge. It actually starts in about 45 minutes with anybody who is in the ForexAnalytix community. So with that being said, thanks everybody for being here. Thanks for keeping us up to date. And Dale, I know you have an interview this morning, so have a great interview.
All right. And thank you, Dream Team.
Thank you,
for,
Dale.
for guiding us through the nightmare. It takes a dream team to counteract the financial nightmare. It is one, isn't it, Gary Coleman?
Always a poet.
Huh? Is it? Come on, Gary. Aren't you saying that on Fox?
Hello, can you got me?
Get your mic on. Isn't this a financial nightmare, Gary?
It's everything I've warned about for 3 years. And I must tell you, I was in, I got to share screen, right?
Yeah, go ahead.
Share.
Where are you getting that sunburn on your face and shoulders?
I just came from Mexico.
Okay.
I should put on a regular shirt, shouldn't I?
It's
I didn't realize I'm gonna be viewed.
Yeah, you might need a few bouncers to keep all the women away from you.
Give me 1 sec.
All right. Gary's jumping in the shower. He's got there he goes. Yeah. Look at this guy. What a warrior. He's putting on his suit of armor. Go ahead, buddy.
Let's get serious here. For 3 to 4 years, I've been yelling and screaming about one man, Jay Powell.
Yeah.
That he played God with the biggest market on earth, and that is the yield market, where every business, big, medium, small, every individual, every investor, speculator, and trader had a kowtow to 0% rates and absolutely rigged markets with fake conjured up money. I warned about the bubbles. The bubbles came, the bubbles popped. I worried about the distortions all over the place. And I worried about the unknown. What's the unknown? Well, I remember one thing stood out for me more than anything. Austria was able to float a 100-year bond at 0.8%. And I believe that bond is probably down 60, 70% right now. And you have to hold for 100 years to get your money out. It was that point in time I realized that Jay Powell, in his numbskullish way, had no idea that he has now forced all kinds of money that is denoted to income, forced to go out long or make nothing. At the lows, the 10-year was yielding 0.6%. And my question was, if all this money went into long-dated paper, and the eventuality was always that the bond market would eventually pull out the big middle finger and stick it back at Jay Powell, which, by the way, is us, how big a losses would there be? And in what shape and form will they come? And when will it come? It just came. And guess what? I was in Mexico, just got back. I was stunned to hear.
Where were you in Mexico, Gary?
In the middle place called San Miguel Allende. And by the way,
Are you thinking of moving there to get out of the country and ride the storm out down there?
Oh, hell no.
Okay.
Safe as can be. There were no issues. But
All
back
right.
to my point, I've been stunned. We had Fox on TV there, and I watched people, and I had CNN come on and say, Jay Powell just saved the banking system.
Yeah, he nationalized it.
We're now good. We're covered.
Yeah.
Just so you know, they took over the retirement system with Social Security, a lot of it. They took over the healthcare system with Medicare, Medicaid, Obamacare. They're trying to take over energy. They've now taken over the whole freaking banking system. They nationalized banking, and they had people coming out saying, no, they didn't. When you backstop every depositor, you nationalize the system. But here's the problem. They have no capital.
Yeah,
they're now in prayer mode. They are now in prayer mode.
Well, isn't that what Gold is saying, Gary? I mean,
Pardon?
I like your fire and brimstone here today, Gary, but I know you have been concerned about this. We all have. What are the implications? What are you telling your clients now? Because, I got this question Monday. Dale, what do I do? And, everyone's thinking about, well, should I buy? Should I sell? What about the option of do nothing in this environment until markets settle down and the dust settles?
Well, I can answer that with a couple of emails I got from some of the people that, follow me. Why aren't we shorting and longing? And I just said, if you want to stop out 99 out of 100 times on gaps to the upside, gaps to the downside, look what they did yesterday in the last 40 minutes. I said to them, here's what you do. You protect your capital at all costs. You wait for big fat pitches. Right now, it's news driven. It's all over the map. You have the people that cause the problem just take over the banking system, and you want to play into that? Well, what about gold? Gold's going to get a bid right here, but guess what? If they do something else, if this happens, we can wake up and gold's down $200. You just try to protect your capital at given points in time. This is not just money; it's the psychology of money. And those who keep their high water mark or near it, which we have done here very, very well. We lost no money in the bear market. We had some losing trades, but we stayed pretty much flat. Those that do that can sleep well at night, don't have money to make back, don't have to force things, don't have to force the issue, and just wait for big fat pitches. We also have identified a narrow list of strong tech names that are almost at new yearly highs, but we're also telling people if this worsens, we go back to one of our tried and true mantras. Eventually they get them all. So you better be on your toes. And that's that. The biggest issue
when they raid the saloon, they take all the girls.
Bingo. The biggest issue we have is and I say this all the time, if you had a doctor and you broke your left arm and you walked over to him and he put a cast on your right arm, are you ever going back to them? You're not, because you have a choice. We have no choice. We have to deal with Jay Powell every day. The man who decided to play God. By the way, ground zero was Bernanke. The trifecta of Bernanke, Yellen, and Powell is the worst possible trifecta at all time, and she's now Treasury Secretary. And I have to tell you, where this stops, I don't know. And the problem is they were forced into doing this with their own mistakes. Why? Because if they didn't do what they did, we would have had a run on 100 small banks. And JP Morgan would probably have 50 trillion under management now. But at the same rate, it's going to happen eventually anyhow.
Okay, well, let me ask you this. I know we're focused on banks, but
Yeah.
I've been saying for a while, well, what does Buffett say? That you don't know who's swimming naked till the tide goes out?
Oh yeah.
And okay, so pension funds, they had to do the same thing the banks did. They had to generate 7% yield a year to keep it
Bingo.
even. They went out on the risk curve to generate those returns.
Bingo.
They bought a lot of low quality paper. I think there's no way that the US government doesn't bail out pension funds, which is probably
But with
the
what?
next, huh?
With what? More printed money? Okay, great. Let's print trillions. And you want, you know, they talk about inflation and this, that, and the other thing. We're headed for a bust one way or the other. And
Yeah.
just so you know, I'm not one of these guys that comes out calling for crashes and smashes and 50,000 Dow. I keep my feet on the ground. But all I know is, and it was just so logical, what is the outcome of one man being able to, with no accountability, no oversight, print up to $9 trillion, get Europe to do the same. And there's two words that are involved here: forced to. All these entities were forced to doing things they would otherwise not do.
Like be at SVB, to be at SVB. Why not let those people take a hit? If I was long bonds when yields were 2%, T-notes, who's going to come and handle my deficit on my trading account?
You got it. So they've opened this big spigot up. And again, I was stunned to hear people say we weren't nationalized. They just backstopped every freaking depositor out there. By the way, they have no capital. They're saying it's going to be with the fees of depositors. How are you going to pull that crap out?
And the dollar's up on this news. So wouldn't you think that would portend a pretty serious, that could be the next sacrificial lamb, don't you think? I know there's a shortage of dollars, but this can't be good for the dollar.
All I know is, when all is said and done so far, whenever we get into situations like this, flight to quality, the dollar's considered the quality because it's the big, most liquid. Then that's why yields are coming down markedly. I mean, the yield market is trading like penny stocks right now.
Yeah, and exactly. The people compare it to third world country debt markets.
This is all the outcome. I'm sorry, but it's the outcome of one man and his ability to do what he did. And I almost can't blame him. We allowed him. Our government allowed him to do this.
Both parties.
Right. And the reason why is because my other line: nothing's wrong as long as nothing's wrong as long as the market behaves. Everything's fine. Don't worry about what's underneath the surface. Don't worry about debt and deficits until it destroys us. And now we're coming home here. And the benefactors, as usual, are going to be the big mothers. I hear Goldman picked up a ton of Silicon Valley stuff, and I heard it was negotiated. There is no doubt they cut a massively great deal for Goldman on this. Yeah. And by the way, how many Treasury secretaries have come from Goldman? So what I call the cesspool.
It's a cult. It's a cult.
The cesspool between Wall Street and the politicians continues. We're the victims. They're now telling us how much they saved us when they just made it worse. But I think they were forced into doing something to protect their own, asses. And somehow this guy is Teflon. When they have their meetings, they treat him like he knows what the hell he's doing. He acts like he's in control.
Let me ask you this, and we're talking about solvency and we're talking about debt.
Yeah.
Okay. The next solvency issue, and with this going on, I'm sure there are many in Congress that are as furious as you are about this, more on the right than on the left, of course.
Yeah.
Is it possible that this just added gasoline onto the fire for there to be no deal on lifting the debt ceiling?
I don't know.
Because, majority opinion is this. They'll go through their theatrics, they'll do the hokey pokey, and they'll raise it. But isn't there enough vitriol for that not to happen? And people, I mean, if you're angry and I'm upset, and people are calling their representatives, they're upset. Maybe they could use this as an example. And
I'm a big believer in history and precedent, and there's never been a ceiling on the debt ceiling. And it just feels like both Republicans and Democrats are cursing each other out in front of the camera, and they're laughing their asses off behind the camera, or popping the
You're probably right. You're probably right.
And I have this line on my radio show: I have never been more optimistic on most of us. I've never been more pessimistic on them. What they have put us into, where very soon, 1 trillion of our tax dollars are going to go towards interest every year. It's criminal, and there's nothing we can do. And one elected person is worse than the last one. So what I just tell my peeps and myself: keep my feet on the ground. I've got a great eye for charts and chart patterns. Pay attention to price very much now. It'll dictate. A Monday ago, I'm telling everybody on my show and on TV, I'm really worried about how financials are acting, not knowing what was going to happen.
You're right. They were giving tells. They were breaking down.
I was watching insurance stocks crash, the regional banks getting destroyed, and I'm like, what's up?
And how about even the Russell? One day the market was flat and the Russell was down,
which is small, 2-3%.
Yeah,
which is small banks. And I emailed Neil Cavuto on Fox Business, and I think I used the words, Neil, I'm just letting you know something is up. And Neil knows back in 2008, I was one of the first to get worried about the financials, because for 9 months, the financials were woefully underperforming. I remember the Dow rallied 1,000 points and financials were down. And then the Dow dropped 1,000 points and the financials led down. So I'm a big believer. Watch this market here, and you're going to know a lot. I watched yesterday the regional banks gap up and sell off throughout most of the day. People were, hey, Pac West, look at all this insider buying. And I'm trying to tell them, well, wait a minute. They started buying at $23 and it went to $5 2 days later. I'm not sure I'd be listening to them. And I just be careful here and don't blink, because it's going to be news driven. They're not going to shut up in Washington. They're going to try to protect their own asses right now about all the mistakes they have made. You're going to get Elizabeth Warren blaming capitalism. Bernie Sanders saying we need to probably hire Hugo Chavez to run the show, and just watch price and it'll dictate. And I'll just show you some charts here to just look at MetLife.
Wow.
A stodgy insurance. By the way, you mentioned pensions and insurance companies. Guess what? Anything financial. Look at Allstate. This is not supposed to be. And again, they started breaking before this Silicon Valley Bank. So I'm just, where I stand on everything. I think we've bubbled up to the next chapter of who knows.
Of the great reset.
Yeah.
What do you think the Great Reset is? Do you ascribe to that?
I don't know. I don't know how this ends up. Because
finance. Yeah.
I don't know how you get the what back into the goose.
Yeah. Okay. So what about Gary, CBDCs coming down the line? I think that if that's something they're going to do, it would happen during a dollar crisis, so the public would go, oh God, the dollar is just getting creamed, and they'll come out and they'll say, well, this digital dollar, this
well, they couldn't even manage their own the dollar, and then we're gonna go do some digital. So
for control
again, we're at another moment caused by the people that are still running the show. And what I simply do is I have one rule: if it's below the 50-day, it's uninvestable. If it's above the 50-day, there's opportunity, and that goes for any entity that's out there. And I gather soon the best looking charts are going to be the inverse, sector and market charts, but not just yet. And I have a select group. But I mean, look, look at CDNS and AVGO. And FSLR, it's not hard to do my scans now because I end up with 50 names out of 12,000. But I said to somebody, do I trust anything here? Because you can have these things that look great today and be down 15% tomorrow, because in the end, another leg down, the big money has to go to what's in profits and what's holding up. And that's what they'll do. But for now, I have this select group of BKNG and CDNS and First Solar and, believe it or not, GE and GE Healthcare and Meta, because they keep firing people and the stock goes up. And some semiconductors like STM right there.
Yeah, but the semis still looked okay to me. I don't know what they'll look like today, but they still looked okay.
They look stellar.
Yeah.
For what, I don't know what the reason is, but they look stellar.
How about yields? They're very interest rate sensitive, so maybe they're smelling instead of higher yields, lower.
Could be. And you watch housing stocks here. If they still go down while yields are coming down, that's going to tell you something. We're seeing economic numbers right now that are less than stellar. Every time I'm on TV, I'm saying we got a problem here because savings rates have plunged and credit card usage is skyrocketing. So we can say the consumer's fine because, they're still in the restaurants, but they're running out of bucks and they're running out of credits. So call me very worried.
Yeah, restaurants are still packed.
Yeah.
And it's never been more expensive to go to a restaurant.
That is correct. Prices
but they're
ridiculous.
packed.
But now we're going to have to deal with deflation, not inflation, and
of assets.
Food
prices aren't coming down. We'll have some inflation. Food prices won't come down, Gary.
Yeah, just this is the outcome of one man's whims with unimaginable amounts of conjured up funds, and nobody ever stopped them. As much as I yelled and screamed on television every time I'm on Fox, completely ignored, because why? Oh, look at GameStop. Oh, look at the crypto. Oh, look at the market. Oh, everything's great, terrific. Oh, boom. So what can I tell you? By the way,
all right,
this tells you a lot. Look at Ferrari stock.
Yeah, the wealthy are still wealthy.
Oh, and they're going to stay wealthy.
Yeah. So Gary, I hope you feel better from being able to ventilate. I love to give you a chance to, get some of these emotions. Go ahead.
And let me say this. I take absolutely no joy.
I know.
In any of this. I want to be able to applaud and give standing ovations to our leadership, to the people in it running it. But I'm a numbers and a reality guy. And we're up to 32 trillion of debt. By the way, Biden voted for 26 trillion of it, and he would have voted for all of it if it wasn't for Trump, him being out of power for 4 years. The Republicans talk a great game when they're out of power, but when in power under Trump, they ran 6 to 7 trillion of debt. So I have no trust there. And, I just, what can I tell you? I put my feet on the ground. I just look at the patterns. I stay focused. I have no longs. We'll get long some anti stuff if this continues. And hope and pray better happens. But when you have the guy who put the cast on your right arm, when you broke your left arm, running the central bank, and his counterpart in Yellen, the Treasury Secretary that wants world taxes.
Yes.
You get speechless, and you keep your fingers crossed and hope for the best.
Well, more and more people, Gary, are starting to see the con in confidence.
Yeah.
Okay, so may you live in interesting times, right? So here we are, and we have to do our best to make sure that people are understand return of capital, not just return on capital.
And I told my people yesterday 3 simple, well, it should be actually 4. Do not get cute.
Okay.
Right now, just do not get cute.
All right.
I don't know where this ends up. Who knows? Maybe we finish up 1,000 points today because Powell announces he's lowering rates, and of course you sell into that. Just do not get cute. We're in unprecedented times of debt deficits, leverage, and stupidity, and where it stops, I don't know. I think the final outcome will be they think since it worked once, we may print up to $25 trillion for all I know.
Yeah, I think they'll keep the juggling the balls in the air for another year or so. Just my take. And there'll be rallies and there'll be failures. But are you still focused on a 3,000 S&P reading sometime this year?
I think there's ultimate, and that's based on valuation and earnings. Earnings,
Okay.
are, you got some
That's
stocks.
That's before the banking crisis. 3K,
but yeah,
right?
I would think so. Look at Seagate; they rallied up on a 93% drop in earnings after an 80%. You can't do that.
It's not as bad.
And ultimately, even though Meta's rallying right now, the last 4 quarters, -18, -32, -49, -52. That's why they fired 25,000 people.
Yeah.
I don't know if you want to depend on that. O'Neill taught me the greatest stocks are the ones where they're hiring 25,000 people and where earnings are up 50%, not down. So, I just take a step back, relax. And as I said, we're pretty much flattish throughout this whole thing. And, we'll see. We'll eventually
Gary,
get some. Yeah,
go ahead.
Sorry. We'll
Go ahead,
eventually get some real big fat pitches because I think they're not going to be able to stop progress and new inventions and technologies and medicine to come out. And there'll be companies that are 10 baggers in the years ahead. But right now, I think there is a mallet overhead, and anything that tries to pop its head out, it will be a little bit of whack-a-mole, and that'll be the basketballs being held underwater. And eventually, hopefully, it'll be released, but I just don't know if it's in the near term. And, thank you for letting me have this forum, and I hope I'm wrong. But we've been
consummate Gary Kmam, the consummate pro who wears his heart on his sleeve. Thank you, Gary.
I give a crap.
You do, man. It was great. Despite the outside conditions in the world, Gary, great to be able to spend 30 minutes, exchanging ideas and being able to listen to you express yourself. So thank you, my trading warrior brother.
You do great work, Dale. Thank you.
All right, Gary Kmam, everybody. You can follow him at Gary Kmam and catch his radio show and catch him on Fox and include him in your thought process. So that's a wrap here, everyone. Good hunting. Take care. See you tomorrow. Could join the team in 17 minutes. Not Gary Kmam. No, Tony. Yeah. Anyway, people are thanking you, Gary, and you could join the team in 17 minutes on the morning edge and keep an edge in this. And I don't mean being on the edge of the cliff either. So don't just count your pips, everybody. Count your blessings. Adios. You're welcome, everyone. Thank you.